Just because an IPO is at $1 billion, that doesn't necessarily mean it's such a good choice. I'm here with Francis Gaskins, president of the IPO Desktop. So, Francis, we have 6 new companies in the pipeline for IPOs that are looking for $1 billion. This isn't necessarily a good thing. Look what happened with Groupon.
Yes, Groupon was postponed, and my favorite thing about that is that's the biggest IPO pump and dump since Webvan of November 1999, which was a $4 billion valuation. So Groupon, they showed in the last filing a negative net worth going into the IPO. They lost $244 million on a billion and a half in sales. So that one I would forget about. Zynga's been postponed. They get all their money from Facebook. I think Facebook is probably topped out in terms of registrations. 1 in 10 people in the world use Facebook. And Zynga's user metrics went down the last 3 quarters of last year. They introduced some new games. So the deal with Zynga is it has to introduce new games, new hits, which is not a guarantee. So that would be really speculative.
Right, and with Zynga, they've got a patent lawsuit out there. The company is also getting lots of questions from the SEC. We also have government-owned entities coming out. We've got Ally Financial, and that one just reported its second quarter terrible financials. The company's losing money in its mortgage business.
Right. Who knows what the value of those mortgages would be on a book value basis? It says that they have $20 billion net worth, but 17 billion of that came from the U.S. Treasury. It's owned 74% by the U.S. Treasury. So that one can come at a discount if the government wants to sell it. Investors, have a hard time, seeing through the financials of that company.
And the government's been trying to get rid of its AIG. AIG is getting rid of ILFC, the airline leasing company. Again, another big deal, but this company, it's got all kinds of problems. They can't do certain things without asking the Treasury Department first. And even though AIG says it's not a core business and they're getting rid of them, they're still going to hold a lot of the stock.
There's no growth there, especially with the founder of the other company leaving and doing well. So that one's kind of a wink.
And then we've got Carlyle. Obviously, they're following on the heels of BlackRock, KKR, Apollo. But all those companies have performed fairly poorly this year. The stock has anyway. So it seems like, it's a little too late for the party for Carlyle.
Well, they missed the window again. Yes, that sector is down 41% from the highs of this year. And there's very little interest. In that area, you need to have rosy forecasts going forward, and people just don't have those. They don't believe in those. And so I think Carla probably filed in the hopes that they could go sometime next spring. Well, good luck. I mean, certainly they can't go public now, or they shouldn't go.
All right. Well, just because it's $1 billion IPO doesn't mean it's a buy.